Hello guys, welcome to Decalo FX. So today we'll be talking about market structure. I'll make you to understand market structure in a simple form. You will understand market structure and know how to approach the market when you open your charts. So first of all, I would like you to please subscribe and like the video so that when I post more videos about trading, you'll have to get alert so that you could learn fast and work with me. So if you can start about market structure. Market structure is just an uptrend and a downtrend. When the market is creating uptrend, uptrend and downtrend. Hello guys. So today we'll be talking about market structure. I will make it simple for you to understand what is market structure and how can you approach anything about market structure. So first of all, I would like you to subscribe and give me a like when the video ends so that you could get more videos and I could continue to work for you guys. When if you don't have money for mentorship, you just have to learn from this channel for free. So market structure, it's about an uptrend and downtrend and consolidation. So when we are trading a smart money concept, we focuses more on market structure. Market structure is the key. Market structure is the king. I'm repeating this. Market structure is the key. So if I can explain to you what is market structure. Market structure in an up trading structure, market is classified as of creating higher highs and higher lows. Also in a uptrend is breaking the previous high and respecting the previous higher lows. So when we mean of uptrend marketing, we are just referring to this when the market is creating higher highs and higher lows. When the market is creating higher highs and higher lows. You can see that this is an uptrend. For those who trade with trends, they can come here and put their lines. This one shows that the market is on an uptrend, and we can see that it's on uptrend. So this is very important when we are trading smart money concept. You have to know the market structure. You have to know where the market is going next. So in a downtrend, trending structure market is classified of creating lower lows and low highs. Also in a downtrend, market is breaking the previous lower lows and respecting the previous lows. Yeah, so on a downtrend, the market is just doing the opposite of an uptrend. So if the uptrend is like this, it means the downtrend will be trading like this. As you can see that the market is on our downtrend. So you know how this helps you, né? This helps you on a smart money concept trading, that if you check the market structure, you will know where you are going to take your long position and your short position. I mean, for holding now, you will know that if my higher time frame market structure is on a lower is on a higher time frame is uptrend, so I have to buy hard or buy high and sell low or do short sales, because you can't trade against the trend, so you have to go with the trend, because these banks, these smart money people, they trade with the trend, and they're the one who created the trend. So if you need this document, I have the document here. I have this document which is for my students, so I can't just give it for free. If you wanna join my mentorship, you can DM me on Instagram or WhatsApp me. Check the description here, you will find my details, so that we could come and we could do this thing together. Then we could win more and we could fight poverty, guys. Okay, let's continue. So I'll be reading out for you guys, because I can't give this document for free, because it's a paid one, you see. So my student will not allow me to do that, you see. So let's go downwards on a bullish trend. If you can check this, if you can check here on a bullish trend, you can see that the market is creating higher highs, higher lows, higher highs, higher lows. You can see higher low, higher high, higher low, higher high, higher low, higher high. So uptrends, we are letting the highest respecting the lows, but keep in mind, for us to go bearish, we must tell the higher low, then pull back to create a lower high. As you can see, the opposite here on a downtrend, you can see that we are volatile the lows respecting the highs. You see, when the market comes here, it respects the high, and it volatile the low. It's coming here to respect this high, and it will come and volatile the low. So when we go further, I can read it for you, this one. And market structure shows us the institutional traders, where the large majority of buys and sell position are being placed in the market. It illustrates what position the bank are currently in, whether they are in long or short, and the next major trade they should be doing, or they should be placing their order where. Market structure is the first bricklayer of the house. That's true. You can't trade, or you can't go to market without first attacking the market structure. You have to know the market structure. You have to have the understanding of market structure. So if you could check here, if you could go forward, without understanding market structure, there's no foundation for trading. When you are able to understand structure from micro to micro, then you will be top. You will be at the top in the game. You'll be trading like top traders. If you could go further, you could go to market structure is fractal. What do we say when we say market structure is fractal? A fractal market means whatever we see happening on the higher time frame also happens on the lower time frame. Most especially, we can see it on a multiple structure, pullbacks, and certain market structure. So let me show you this one of market fractals, and it is very important market structure. As you can see, what we see on a higher time frame, we could also see it on a lower time frame. What you can see on a higher time frame, we could also see it on a lower time frame. If you go down, this is a higher time frame, and if you go down to our lower time frame, you can see our lower time frame higher. It was creating higher high, and the higher lows, higher, and the higher lows, higher, and higher lows. So here you can see the market come with higher, lower high, and lower lows, lower high. Then when it comes to higher time frame trend, it have to respect the higher time frame trend and go through with high and higher lows. You see, we could say rules of trading the market structure. Trade management is key when we are trading the pullbacks of an uptrend, because the smaller time frame it will be a bearish trend, but the main purpose of the bearish trend is to create the higher lows on the higher time frame. So we must always be strict with our profit target level. The way we take profit is not with the TP future but with stop loss option. This may stand off, but here is why our stop loss will have to take profit. So if you understand the market structure, multiple structure, it's just that the lower time frame trends, it will be more different to higher time frame trends, and it will be a problem to traders those who like to hold trade. If you like to hold trade and you are a day trader, or you trade micro time frame, so you have to be sure and aware of higher time frame trend. So let's move forward to market structure breaks. There are 3 different market structure breaks, but you must choose one that works very nice and suits your criteria of trading. There's a break of structure, part 1, when the market change the movement, we can call it the break of structure. And there is a break of structure when the market is manipulating the lower low, or the higher high. If the market is on a higher high, you have to break that previous higher high to create another higher high. And if we are on the downtrend, you have to break that lower low and to create the higher high. So going further on market structure, I will say market structure, we trade with a golden rule. We have some golden rule from which were formed by those mentors. What I can tell you about the golden rules, that the absolute basic on a trend, and always observe the higher time frame, and the higher time frame overpower the lower time frame. Do not get lost in lower time frame nose. You see, this is a very, very important one. Do not get lost on a lower time frame nose. Top down analysis, you have to make them to start on a higher time frame. Pullback are a good way to enter. And if I can show you here, let me delete this first. I want to draw again. Why it's not true? Okay. Sorry. Let me draw here. There's a simple bull trend and a simple bearish trend, which you saw here is just a high and the yellow, where there was no multiple structures. And multiple structures, they don't have to confuse you guys, because you will always get them on a lower time frame. If we could go to type of market structure shift, we can see that the market structure mapping body, market structure breaks the body. It's when the market does like this, and this is a very, very important one. You have to repeat and repeat this video so that you could understand more. Yes, and here you found out that there was there was a last candle here. And the other one which breaks impulsively. What do we mean when we say market structure mapping body or market structure break on body? Yes, a week. There will be a week. There was a week. When we refer to market structure, break of structure by body, we refer to when it break here, it's a break of body. When it break this side, is a break of the week. When it break, sorry, when it break by when it breaks impulsively here, it's a break of body plus week. And there can sometimes be an initial break, and this lower time frame structure they can be denoted as liquidity tester, not an actual break. The body will be at the actual break, and this can only be used on higher time frame as we want to use the full expansion to our advantage. However, on a lower time frame, 5 minutes or less, it can be deemed as noise. A low of a low, high place in the structure. This factor in all the method and small method or play liquidity, and this is also the preferred method. Use the weak breaks as intent. If you wanna confirm that this is a break, you have to use the weak as your confirmation that yeah, this is a valid break which you could use, or this is a break which you could go with. Guys, this pdf is full. I finished writing it with order blocks, marketing efficiency, going to sniper entries, how to find sniper entry. But guys, this is not a free one. If you want to join my mentorship, you can follow me on Instagram, DKLowFX, and you can DM me on WhatsApp. The number are there on the description. So guys, I would like you to join so that we could work together, so that when I say something you could understand, and when we are taking trades you will be understanding more there, because when we are giving signals, we explain whenever we take and whenever we looked at. So guys, I would like you to have a productive year and productive days. So thank you.